Hello everybody, welcome to the weekend wrap-up of the Forex markets. Today is Saturday the 3rd of September 2011 and we're going to begin today by looking at the S&P 500. The reason we're going to start with the global markets is that we've been talking about it previously, and I did write an article on the website suggesting how the previous rally over the last couple of weeks has lacked volume, lacked conviction, and I did mention how we had stalled out at this 50% fib here, and coming into those non-farm payroll figures, which were came out on Friday, which were not expected to be great, and which in actual fact was zero. You can see we did have the sell-off that was expected. Now, those non-farm payrolls, when I first saw the figure of zero, I thought it was an error, but no, it wasn't an error. There were no new jobs created. So we did have our sell-off. If we look across to the FTSE 100, you can see it's a similar story. You have the big sell-off through basically from July and into August, and then and these attempts at a rally. It has actually made a couple of higher highs and higher lows here, but this 50% fib level here has been key on the equity markets, and you can see it has stalled out and dropped back. This tells us that the market is becoming risk averse. The market is looking to sell. The market is nervous. So any time when there's a reason, they're looking to sell more so than they're looking to buy. The lack of volume in the build-up was a clear indication that there was no real belief that the rally was going to continue. We had some other risk event this week. Early on in the week, we had the FOMC minutes. Now we had last week Ben Bernanke's speech where he mentioned that there was a range of options still open to the Fed to try to, help the economy, add further stimulus. And what was unexpected was that when these minutes came out on, I think it was Tuesday, they had clearly laid out what these options may be. Now, this did help the rally early on in the week, and you would generally expect the suggestion of further quantitative easing to be negative for the US dollar. But if we look at our euro dollar chart, we can see that this week has been significantly bearish for the euro, and stronger therefore for the US dollar. Now, why? Okay, so suggestions of QE, further quantitative easing, or some form of stimulus, they do actually have the option of direct purchasing, which is really what quantitative easing is, increasing of the Fed's balance sheet. However, there are other options that they are looking at as well. But generally, stimulus or quantitative easing would be considered negative for the US dollar. But you can see here with this sharp decline over the course of the week from the top of the range here. We highlighted this range high here in the video last week, so it was an excellent position to be in. The reason why the US dollar did not sell off and there was no strength for the euro is because the situation in Europe is continuing to disintegrate. The situation in Greece, we all know what's happening there, but it's just falling apart. The bailout package that they agreed on in July, it's not even looking like that's going to go ahead now. Countries are coming out saying we want some sort of collateral before we give them the money, and then other countries are saying, well, if they're getting the collateral, we want the collateral. So there's no real agreement, and it's not looking good. Let's just say that. So for the euro, things are not looking good. Another very interesting piece of news that came out this week was the fact that the 17 of the biggest banks basically in the world are being sued for their role in the original housing credit crisis. Now, If there is going to be, say, a credit crisis phase 2, this is one thing that is definitely going to be bullish for the US dollar. The US dollar, in terms of safe haven currency, it's because of its the ability to buy and sell US dollars is greater than any other currency. It's a liquidity currency more than it is a safe haven currency. However, when there is a credit crisis, the safe haven that investors are looking for is something that is very liquid, very easy to sell, buy, so you can get access to cash. That is the US dollar above all. So even though NFP, non-farm payrolls figures are dire, there is a suggestion of further quantitative easing. The fact that there is, problems in Europe, there is this suggestion now that the banks may stop lending. There's going to be a bit of a freeze on credit. This is going to be very bullish for the US dollar. So, and we can see there, it played out very nicely with euro dollar. It matched in with the range high, so the technicals were there, the fundamentals were there. It was an excellent trade. Very good chance that this will come all the way back down to 140 here and test the bottom of this range. If we move on to the US Swiss, if we look here at the chart, the weakness in the Swiss franc, or the strength in dollar Swiss, conversely or inversely, the reason for that is because the Swiss National Bank has been intervening in the forward market. They have been actively weakening their own currency. But this week they played no part in the forward market, and you can see the strength immediately came back for the franc. It was really strengthening actually until on Friday afternoon we saw this strength of the dollar when the news was emerging about this potential for a further credit crisis and these banks that are all being sued. It's some really big banks. You've got Bank of America, you've got Credit Suisse, Morgan Stanley, Goldman Sachs, Societe Generale. It's 17 of the hugest banks in the world which cannot really afford another major crisis. So there we saw the strength for the US. Cable. Now, early on in the week, I actually tried to play this pair to the long side, but once if you pull back to the daily chart for a moment, once it broke through the this channel, this trend line here, all long bets were definitely off. It has gone up to almost retest this, and if we go to the hourly, we can see it a little better. Let's see it here. It has gone up to potentially retest that. So a move to the downside, a short position here, it's a possible play. But for now, after a couple of failed attempts at this pair this week, I'm going to leave it alone. Moving on to dollar yen. Now, this is one pair that could benefit from any potential credit crisis. It's already basing, it's already forming a very solid base here. These tsunami lows down here at 76.30, they have proved significant support. You also have the threat from the Bank of Japan. They have mentioned numerous times that they are looking to weaken this currency. So the position here would be long, but there's no rush. You may, if it does drop down to this 76.30 level, perhaps that might be an entry position for a long. But I am looking to get long at some stage in this pair. Now, the two pairs that we had the greatest success with this week, first of all, Euro Pound. You can see the rally from the bottom of this range low up to the range high. Then consolidation. 3-4 attempts to break this range high, unsuccessful. Short, down, test of support, broken support, and then the big move down on Friday. I don't hold positions over the weekend, as many of you know, so I'm out of here. Actually got out a little early, could have held it until the close, but I wanted to switch off a little early, so took the profits and relaxed. However, there is, opportunity for further downside down to this range low here. So that's one to keep an eye on. And the other one that we were playing was the Euro Swiss. Now you have to be very careful with Euro Swiss because of the intervention threat from the SNB. But due to the overall weakness of the euro, the problems in Greece, and then not only just Greece but the contagion, there's even talk of Greece, there's some rumours of Greece quitting the euro altogether. If Greece did quit the euro altogether, it could symbolise the beginnings of the breakup of the euro. So yes, definite weakness for the euro. So after the Swiss indicated that they would not be participating in any forwards markets this week, you can see immediately this strength comes back for the Swiss franc. So yes, we played this one to the downside, but as I said, you must be careful. It's a good idea to take your profits on a regular level. Look to get back in perhaps on a corrective wave or on a retest of a broken support, something like that. There is a potential for an inverse head and shoulders here, but you would need to break this. You would need to break this neckline here. So a move up would need to break this before you were looking for further upside. At the moment, I definitely do not see that. Final chart that we can look at today is gold, and you can see what happens when you have a risk aversion move in the current climate. Problems with the euro, threat of intervention from the Swiss and the yen, problems with the US dollar. Gold is a real alternative, and you can see after the previous correction, we're on our ways to new highs now. New highs are almost nailed on here. Once you have a correction and then back up to this close to the previous new high, it's no guarantees, of course, but very, very high probability that we will reach a new high on gold. Now, significant event risk next week to be aware of: ECB interest rate, British pound interest rate, GDP figures from the Aussie dollar, and I think the Kiwi dollar as well. We haven't really looked at the Aussie and the Kiwi this week, but as I'm sure you're all aware, when we have risk aversion moves, when the global equity markets drop, when we have slumps, so too do these risky assets, the so-called commodity currencies such as the Aussie dollar, the Kiwi dollar and the Canadian dollar. They will weaken against the US dollar and against the franc and the yen. So perhaps next week, if we have further declines in equity markets, we'll do a bit more of a closer look on those commodity currencies. A holiday in the US on Monday. Happy holidays to all of the US viewers. But remember, the rest of the world is still open, and with low volumes, we could see some high volatility. Good luck. See you all next week.